SCORE Northeast Wisconsin and WHBY are pleased to bring you Biz Talk, a chance for you to hear from entrepreneurs and professionals as they share their experiences. From starting to sustaining growth, learn the skills needed for your business to be successful. If you miss anything, you can catch the Biz Talk podcast at score.org/Northeast Wisconsin. And now from the Myron Construction Studio, it's Biz Talk on WHBY.
Good morning and welcome to Biz Talk with SCORE. I'm one of the co-hosts, Terry Pinch, and joining me as co-host this week is Rick Sense. Rick, how are you this week?
I'm doing well, Terry.
Excellent. As we get started this week, we are having a longtime sponsor and regular guest on the show, Kurt Heling from Heling and Associates, join us. Kurt, how are you this week?
Doing well.
And happy that the tax deadline day is passed.
Oh, that's always April 16th is always a holiday.
It is. And that's one of the things we're going to talk about today. There's a number of different things we'll go through, but let's start with some of the issues and learnings from the 2024 tax season. What stood out for you?
Well, one of the things that I saw this year, it's been a trend the last couple of years, but it seems to be getting worse, not better, is the number of people that are owing money for federal taxes. A few years back when the tax rules changed, the IRS revamped the W-4 form and changed how withholding was computed and changed the payroll tax tables. And nobody really noticed it for the first couple of years because of COVID credits and things like that were out there. But the last couple of years, we've been seeing more and more people owing for federal taxes, and this year seemed to be more than ever. What's happening is with the new W-4 forms, they've gotten more complicated. It's not just single, zero, or married and two, or whatever it might be. It's, okay, single, married, head of household, how many kids are over 17, how many are under 17, what other income do you have in the house, what other deductions, and the thing that these W-4s can never quite get quantified is any other income coming into the household. So, for instance, if you're married, it takes your W-2 income and says, well, gee, this must be the only income for the household, and it compares it with the standard deduction for a married couple, but it in no way takes into account your spouse's income or any other income you have coming into the household, if you've got, any other investment income or whatever it might be. So it does a very poor job of factoring that in. And so what happens is you might have a husband and wife, for instance, they both put married, we have two kids that are under 17 years old. If they each put two kids, then each automated payroll system is factoring in two kids, and by the time you get to doing the tax return, it's as if you had four kids, not two, and you end up being under withheld. So I'm going to get on my soapbox here a little bit. It would be really nice if the IRS would make a quick, easy, and ultimately more accurate W-4 form that said, so similar to the Social Security, where with Social Security you can have 7%, 10%, 15%, 20% taken out. If you could simply pick your percentage that you want taken out as opposed to going through the form, it would make it easier and more accurate. And the last thing the IRS ever wants is to make things easy or accurate.
So I'm assuming then that this was pretty prevalent across your clients as they came in?
It is. And I think what happens is because with automated payroll systems and direct deposit, if you think about years back, you'd get your paycheck and you'd have a stub with it and you could actually look at the stub. Now with everything getting directly deposited and you get your pay stub emailed to you, people don't take the time to look at it. And they don't realize that they're under withheld until they actually get their W-2 or until they actually get their tax return done and find out that they are under withheld. So I encourage everyone to log in and take a look at your W-2, at your W-4 form. Take a look at your payroll withholdings. And if you're federal withholding, I'll say this as kind of a broad statement, but I saw this quite a bit where people's federal withholding was not even 10% of what their gross payroll was. if your federal withholding is not at least 10% of your federal withholding, you're probably going to be in a situation where you're owing, in a lot of cases. And even at 10%, it doesn't mean you won't owe, but if you're under that level, odds are you're going to end up owing for some, at some amount. So I would encourage you to take a look at that. And one of the things that we do, and most accountants will do, is take a look at it, run a projection, say, hey, you're under withheld, you should change your withholding, have an extra $50 a paycheck or $100 a paycheck, have that withheld going forward. Most accounts will do that. Yes, they'll charge you for it, but it's better than having underpayment penalties at the end of the year.
And what type of underpayment penalties are we talking about? Can somebody going to be large? Can the penalties be pretty large?
Well, it used to be it's based on 8% now. It used to be, as interest rates have gone up, that interest rate's gone up as well. You go back a few years ago, it was only 3%. It didn't hit as hard. Now you're talking 8% underpayment penalty if you owe more than $1,000 or more. That potential is out there. So, it's worth taking a look at. And from the other standpoint, from a pure cash flow standpoint, do you really want to get a call from your accountant in the middle of March saying, hey, you need to cough up $5,000 and within the next month here because you owe that much for taxes when you weren't planning on it?
Okay. So, and one related thing to that I remember from last year is that I didn't have enough in payments in the first quarter, and they gave me a penalty because I had sold some stock and I forgot all about it. And then all of a sudden when my bill came, they charged me an interest or a fee or expense for not having enough withheld or withdrawn from my account.
Exactly. And that's that outside income that I mentioned as well. And you need to factor that in. And if you have that on a consistent year to year basis, then you might need to take a look at doing quarterly estimates as well.
Yeah. And that's what I've done is put it all in a spreadsheet and I calculate my taxes throughout the year and I make sure I pay what I owe for the quarter.
And that's what our small business owners should be looking at also because, assuming they've got a profitable business, they need to make sure that they've got their arms around that.
So as you look at this tax year, was there any significant changes in the tax laws or did it hold pretty steady for the work that you did this year?
For the most part, it held pretty steady. I mean, there are certain things that change year to year as far as dollar amounts and thresholds and things like that. But as far as the actual rules, there weren't a lot of things that really changed dramatically. And even going into 2025, I don't know that there's going to be a lot changing dramatically as well. We can talk at some point. I don't know how much time we have in this segment, but there's going to be something coming through as we get into 2026. If you think about, we had an election in November, we had an inauguration in January, Congress is in session, we've gotten through the first 100 days now. It's going to take them all of 2025 to develop a bill, to get it through the various committees, to get it through Congress, and to ultimately get it signed. So I don't see anything really affecting 2025, but I do see something like that starting out in 2026 that's going to have some huge effects. So
as they look at this bill and renewing it, what happens if they don't? How will your day go when they say they're not renewing it right away?
If that were to happen, we would go back to all of the rules that were in place in 2017. We would go back to the old standard deduction. We would go back to the old exemptions. We would go back to the old rates, things that affect our business owners that we're dealing with. Things like qualified business income deductions would go away. It would be kind of like a Back to the Future type thing, because we'd have to pull out all our old 2017 rules and relearn them again, and then update them for inflation and cost of living adjustments.
And then all the businesses would be paying more taxes and a lot more.
They would, because that QBI for the small businesses is a huge deduction. I mean, having a 20% deduction from your business profit is a huge bonus for business owners.
Yep. So that's just a kind of a message to say, Congress, you really need to make sure you do something, or you're going to have a lot of people really angry.
And they better do it before December 31st. We've had situations, we've talked about this on this show, where there's times where it's been after January 1st of the year, and they're still closing out tax rule changes for that previous year. That they better get it in place.
Yeah. Okay. It'll be interesting to see. It's become quite fun to watch some of this as it happens in many ways, and that would not be a fun one.
No.
Okay. Anything else that you saw from during the tax season?
One of the things I saw was some of the effects from the economy. I saw a lot of people with a lot of capital gains coming through on their mutual funds, a lot of capital gains from stock trading, for instance. Interest rates were higher, so a lot of people had CDs that had come due, so their interest income was higher. So there was a lot of what we call unearned income, non-W-2, non-business type income coming through. That was inflating people's income as well, and that was another reason why people ended up owing more money this year than perhaps in previous years. For instance, if you had a CD that you put in at 5% a year and a half ago or 2 years ago, and it came due and renewed in 2024, well, you got to pick up the interest on that at the renewal. And some people don't keep in mind that even though you don't take the cash, even though you reinvest the interest, dividends, and capital gains, you still pay tax on it annually, even if you don't take the money. So that's something else that we saw this year, more so than I would say in the previous years.
So is that something too where it's important for people to be letting their accountant know what kind of investments they're making and where the income could be coming from?
Yeah, and it's really part of basic tax planning, if you think about it, Terry, because, every year in the fall, we talk about tax planning. We get into, what are you going to have for your business income? What are you going to have for W-2 income? If you've got rentals, where is that going to fall in? But the interest, dividends, and capital gains factor into that as well. And some of those differences were pretty substantial for some people this year.
Okay. So, looking forward then, first of all, I assume you had your vacation after the tax season ended, and you're getting ready to start look at 2025 taxes.
Haven't really even taken much of a vacation. I just took a couple days here and there. I haven't really taken the big vacation yet. That'll probably be more so in the summer, but after my daughter's school is out and everything. But took a couple days here and there. Starting to take a look at 2025. We've got a ton of extensions as well that we're finishing up on. So, we're still going to be busy going forward. We're still finishing up a lot of 2024 stuff, with the extension deadline, even stuff that came in, say, the middle of March. There's just that much of a backlog this year. And from a staffing standpoint, it's just hard to get enough staff to push all that through in a 3-month time frame.
Okay. So we're about at the right point for our first break. You're listening to Biz Talk with Score on WHBY, and we'll be right back after these messages.
Welcome back. Glad you joined us this morning. I'm Rick Sense along with Terry Pinch today, and we're talking to Kurt Heling, a longtime supporter and friend of the program here on Biz Talk with Score on WHBY. But before we get back to our conversation with Kurt, I'd like to tell you a little bit more about SCORE Northeast Wisconsin. SCORE Northeast Wisconsin serves an 18-county area in Northeast Wisconsin, plus the county of Menominee in Michigan. We have over 50 volunteers, each an expert in their field, offering entrepreneurs no-cost and confidential mentoring. Those areas of expertise include IT, social media, marketing, cash flow, accounting, strategic planning, workflow, human resources, retail best practices, and many, many others. In order to register for a no-cost confidential mentoring session and or to learn more about SCORE Northeast Wisconsin, please visit our website at score.org/Northeast Wisconsin. You can learn more about how the SCORE chapter can assist you with starting and or growing your business, and you can complete an online application for a mentoring session. Simply complete the online form and submit it to SCORE. Within a few days, a SCORE mentor will be contacting you to set up a meeting. Remember, SCORE is no cost and offers experts who can offer you assistance in many different areas. To get started, visit our website at score.org/Northeast Wisconsin. To support small business people, SCORE Northeast Wisconsin is always looking for new mentors. If you have experience that you would like to share with others, we'd love to talk to you. We welcome volunteers with experience in all aspects of business. Small business owners need your help, and your experience can make a real difference to their success. Go to score.org, Northeast Wisconsin, click on the volunteer button, and fill out the short application. We'll get back to you to explain more. So thanks again for joining us on BizTalk, and now back to the program. Kurt, I have to just ask the question. We're past the tax season, but what about the person who wakes up and it's May 1st, 3rd, 15th, whatever, and says, oh my gosh, I forgot to file my taxes? What does someone do in that situation?
Well, there's a couple of things that they can do. First question is, did they file an extension, or did their accountant file an extension for them? We will, for instance, at our firm, if the return's not done by April 15th, or it looks like it might not even get done by April 15th, we'll automatically extend it if they're in our system, just to make sure that bases are covered. So that's job one, get your extension filed. If you don't have an extension filed, that's where things start to get expensive. If you have an extension filed with IRS, they will only charge you interest and late payment penalty if you owe money with the return up to the point where it's filed. So, for instance, the ones we were working on this week, if somebody owed $1,000 and they've got 2 weeks worth of late pay and interest, literally it might be $5 of late pay and interest. We can live with that. If you didn't file the extension, it is, I'm trying to think of the percentage. I want to say it's like 1.5% a month. No, 4.5% a month. I'm sorry. It gets really expensive. 4.5% a month, I believe, is what the amount is. So you put that on there. Now you're starting to talk expensive money if you owe. Again, with the IRS, if you don't owe, they're not going to charge you for it. State of Wisconsin will charge at the very least a late filing penalty if you don't have an extension, and that can be $50. Again, not blow you out of the water type money, but it's money you probably didn't plan on spending. If you owe, the state of Wisconsin will also charge you interest on top of that late filing penalty, and their interest runs anywhere from 12 to 18%. So I always tell people, pay the state first, for a couple of reasons. Number one, their interest is higher. Number two, if there's a balance due, they will come and tip you upside down and shake it out of you, as opposed to the IRS. The IRS has a lot bigger fish to fry and are not nearly as diligent about collecting past due, especially past due amounts that are within 30, 60, 90 days. The state will be on you within 90 days with notices.
What kind of percentage of your clients would you say actually file extensions versus pay before April 15th?
Well, the paying is one thing, the filing is another. So let's make sure we differentiate there. But the filing, the extensions, I mean, this year, quite honestly, I'll bet you it's a third. And it's partly just because of the sheer volume that we had versus the staff. But at the same time, if they're owing, we tried to get those done before April 15th so we wouldn't have late payment and interest running on that. If they're getting refunds, I know that people want to get their refunds. They don't want to, somebody who owes money, somebody who takes care of the withholdings that we just talked about in the first set, they're getting put on the back burner. They kind of feel that way. It's just a matter of, time and pushing things out. So it was a fair amount though this year. The owing part is the bigger issue though, because I would say this year, as far as owing, there were quite a bit more. I would say between 25% and 33%, so a quarter to a third, ended up owing money with their returns as opposed to years past, it would maybe be 10 to 15%. So there's a lot more people owing money this year than in the past. And that's what we really want to make sure we stayed on top of.
Were there any other reasons besides what we talked about in the first segment for that, do you think?
I think those were really the keys, were the underwithholding and the outside unearned income from your interest, dividends, capital gains coming through. Those are the biggest things that I saw on a regular daily, weekly basis. And then you'd have some one-off situations. But most of those situations, quite frankly, our clients had planned for. They got a hold of us and we knew it was going to happen. We got estimates in, or we got enough to cover it so that they didn't end up having big payments, or we knew it was coming. So we made sure that those got done before the 15th.
Okay, we've reached the point we're going to take our second break. You're listening to Biz Talk with Score on WHBY. Thank you for listening, and we will talk to you right after these messages. Welcome back to Biz Talk with Score. We're talking to Kurt Heling this week about the 2024 tax season and some of the general issues that both accountants and clients are seeing as we go through the year. Before I get back to Kurt, I want to talk to you about a couple educational opportunities. If you go to score.org/Northeast Wisconsin, up at the top of the page, there's events and workshops tab. If you click on that, you'll get a search box to the left, and you can search for different courses, and there's literally hundreds of different options out there. But one I wanted to talk to you about today was QuickBooks training. There are probably 30 different options out there right now for QuickBooks training. So in that search box, you put QuickBooks and you check any location and it'll bring them up. But one in particular I wanted to mention, and that is on May 13th at 10 o'clock Central, and it's called QuickBooks Basics. And what it's really about is, why do you need a bookkeeping software? Excuse me. Why do you need a bookkeeping software? How does QuickBooks work? And why should you consider it, or other software options to help you keep your books? So that's something that I recommend for people to take a listen in at if they're considering setting up QuickBooks for their business. You'll also find there's a series of courses, some of which are lessons that'll be 90 minutes long, or in one case 3 hours long, that you could take to really learn more too. So again, it's in workshops and events. Upcoming, search for QuickBook and any location. And by the way, with Kurt here too, make sure you talk to your accountant, because they can help you steer you in the right direction for what sort of software you should use and how it should be set up so that it makes their life easy. It will make the whole transition for taxes easier. So we're going to turn back to Kurt now. And Kurt, do you have any comments on that, just to add to that on QuickBooks and how people should work with you on it?
Yeah, there's a lot of different things you can do with QuickBooks. It's probably it's by far the most popular small business software out there. You have the old QuickBooks Desktop, which is still a useful tool. A lot of people have used it for years. They like it. They're used to it. But unfortunately, Intuit is trying to slowly phase, actually not slowly, they're trying to phase it out as quickly as they can. It's just the users that keep it active. And then you have the QuickBooks Online, or QBO, as we call it, is an online type version, which gives you a lot different functionality and a lot different look to it. For example, the people who have used QuickBooks Desktop take a look at QuickBooks Online. They say, this doesn't even look like it's made by the same company. It's that different. And the functionality is much different as well, because with QuickBooks Online, it's very much oriented towards downloading previous information, downloading information from your bank, from your credit cards, and reconciling that way. And then it's more of a mapping type software. So you have to set up where the income and expenses, the deposits and expenses get mapped to once it's downloaded. as opposed to the old data entry type thing that we had years ago. And that works well in most situations. But like you said, Terry, you want to talk to the accountant because when you set it up from scratch, it has the ability to import information directly from your bank account, and it may go way back into your banking history further than you necessarily want it to. If you want to start, for instance, January 1st of 2025, and you connect it to your bank and your bank downloads, it may pull in information from 3 years ago, potentially, if your bank allows it to. And so you can have a bunch of data in there that's really not doing you any good and can mess up your QuickBooks file right from the get-go. So you want to talk with somebody about how to get that cut off so you're starting at the point where you want it to. The other thing that happens is some of these programs, you're able to transfer information from one system to the other, like, for instance, a Wave system or something like that, to a QuickBooks. The problem is it may import, customer information, vendor information, employee information, but it may not transfer in your transaction data. Okay, now you've got to bring that transaction data in and try and match it up to the employees or match it up to the vendors or customers. Now, in that situation, you've created a whole lot more work than maybe you needed to from the get-go. So you really want to talk to your accountant about how to set this up properly and how to bring this information in properly so you're getting off on the right foot. Otherwise, you can have a mess on your hands from the get-go. And one of the things with QuickBooks Online is it's hard to fix the messes in there. You can end up with a lot of duplications of transactions. You can end up with transactions being mapped improperly and going to places where they shouldn't be in your general ledger. And unless you're trained as to what to look for, you may not even notice where these things are going.
So with all the changes they've been making with QuickBooks, has it become more complicated for the average user?
It's become more complicated. It's definitely become more expensive also. I mean, QuickBooks has had 15, 20% price increases regularly over the last few years. And, when we're working with people, that's one of the things that unfortunately we have to pass some of those costs along. But it has a lot of different features in there, and a lot of times it's overkill for the various users. So I would encourage you to, as you're looking at it, take a look at the different options that are out there for QuickBooks. There are some very basic options as well as more complicated options. Take a look at those and really try and get your arms around what's going to be best for you from the standpoint of what are you willing to pay for and the functionality that you need it to do.
Yeah, in fact, I'd mentioned that one of the courses that you'll find out there in the SCORE site is they bring somebody in from Intuit to talk about that because they apparently are hearing about how complicated some of it can be. So they try to steer you towards if you're going to go in QuickBooks, which one should you use? Because you don't want the most complicated one if you got a simple business.
No, and especially, I mean, some of these, it ranges anywhere from $50 to hundreds of dollars a month. Why pay that extra? Why pay for all those other bells and whistles that you're never going to use and have it complicate your system?
So as times have changed, are most of your clients coming in using a system like QuickBooks or Wave, or do you still get a lot of shoeboxes or Excel spreadsheets?
Well, one of my old sayings is, if you bring me a shoebox, it better have shoes in it. We don't see too many shoeboxes anymore, but you do still occasionally see some spreadsheets at not so much the old green sheets anymore. Once in a great while you see that, but we do have some people that are basically spreadsheeting things for their business. And if it's a really, really micro type business, maybe it's a side business outside your day job and you've got 2 deposits a month and, 20 checks a year, that's fine for that. you don't need an accounting software for something like that. But if it's something where you've quit your day job and this is what you're doing all day, every day, trying to run it off spreadsheets is not going to work anymore.
Yeah. Yeah, we've had numerous clients that we've steered towards either a bookkeeper that they usually find through their accountant or QuickBooks, saying you really don't want to do this. It's good to do it when you start the business to understand it, but it's too complicated and you'll mess things up if you do it yourself.
Yeah, you don't want to necessarily do it. And you mentioned the bookkeepers, and the good bookkeepers for hire, the contracted bookkeepers are worth their weight in gold, because they can help keep some of these people out of trouble. If you don't have somebody internally, on a staff basis, whether part-time, full-time, even if you have somebody that comes in once a week, twice a month, whatever it might be, those people can keep you out of a lot of trouble, not just from the QuickBooks and bookkeeping side, but also if you have payroll, sales tax, whatever it might be, they can keep you out of trouble that way as well.
Yeah, it's not just the time savings, and people think of it that way, and they don't know that they want to pay money, but it's the legal issues and fines you can get into if you don't do this right.
Yeah, you want to deal with somebody who deals with it all day, every day.
Yep, and we're seeing that more too. So one other new technology that's coming, we're seeing a lot more of, is artificial intelligence. Are your clients starting to do more with artificial intelligence?
To a certain degree, yes. And as I mentioned during the break, artificial intelligence, or AI, can sometimes stand for artificial ignorance too. Because like anything, the old saying used to be garbage in, garbage out. Well, it's even more so with artificial intelligence, because these things are intuitive. They have to have correct information going in order to give you correct information coming back out. And when you're dealing with an accounting system, the better information you can get it on the front end as far as mapping or anything like that, the better the information coming out is going to be.
What about in the accounting field itself? As you look across where things are heading with accountants, is artificial intelligence becoming a factor in the things you do?
It is. There's softwares out there now where you can literally download W-2s and 1099s, have it brought over into a tax software program, and it will populate the tax return. And then from there, it's a matter of, you could literally review it for anything strategic and anything else in there that may not come off a government form, but all that gets brought in. There's good and bad to that, because as I said, garbage in, garbage out, artificial ignorance. As this comes over, it doesn't always populate correctly. So I was talking with somebody who has been at a firm. One of our staff people has been at a firm where they did that, and then they would hire high school and college kids to review to make sure that it came over from the source documents to the tax return properly. And I'm sitting there thinking, okay, you're trusting somebody's tax return to the fact that a high school kid or college kid can make sure that the artificial intelligence brought this over from one source document into the tax return properly. And then after that, you're going to review it. That just seemed like a liability waiting to happen.
And that is just in general what we're hearing a lot about from clients too, is it does a lot of good things, but make sure you don't just hand it out to somebody you're working with. Review it first. You have that responsibility.
You have to review it. And the other thing, you hear guys like Bill Gates saying that, tax preparers are going to be replaced by AI within 10 years or anything like that. My challenge would be, tell Bill Gates to get his tax return done by artificial intelligence within 10 years. Once his can get done properly, then let's bring it out to the general public, because I'll bet you he's got a pretty complicated tax return.
Yeah, and there's a legal case just recently where the lawyer wrote his brief entirely using artificial intelligence, and the judge was not very happy because it was mostly everything. It made up historical precedents. It said things differently, and he never bothered to read it, and it didn't go over well. with the judge.
Yeah, right. I'm sure it didn't.
And I'm sure the IRS would be very flexible too if you send in something done poorly with AI. But
yeah.
So let's talk a little bit about what clients are, how they're reacting to some of the volatility we're seeing, and how are they thinking about their business at a time when we're just going to have some upheaval for a year? What are they thinking about, and how are they managing it?
Well, I think they're concerned, are we having upheaval for a year, or are we going to have an upheaval for 4 years? I mean, that's question number one. Because some of the things that have been going on for the last 3 months are definitely out of the ordinary. And especially if you've got somebody that's dealing with product where materials are coming from other countries or anything like that. So yeah, there's definitely some concerns that way with business owners. There's also concerns, just from the standpoint of how is this going to affect general markets? How is this going to affect people's buying habits? From the manufacturing side of things, costs are going to go up, prices are going to go up. Are people going to, start going on toilet paper runs and stocking up on toilet paper, 2 years worth of toilet paper so that they can have pre-tariff price toilet paper or something like that? I mean, I don't know how extreme they're going to it, but I mean, these are things that you hear about. You see, for instance, cars being sold now at pre-tariff prices, and things like that. I think it's one of those things that, like anything, it'll cycle through. And eventually the pricing of things and the wages that go along with it will even themselves out. But it's a little bit different than we've had in the past. So it's definitely not status quo. So there is some uncertainty out there. There's definitely some concern from business owners, and let's say especially if they're dealing with product or materials that are coming from different countries.
Yeah, I'd say for large companies, having worked in one, they hate uncertainty, so it makes it harder for them to spend money. They just don't like it when it's out there. For smaller ones, this again is where you talk to your accountant and figure out what can I spend? How can I take advantage of the opportunities? And have you had any of those conversations yet, or do you think that's coming later?
I think that's coming later, but the thing that I'll always give small business owners credit for throughout the country, more so than the bigger companies, the small business owners are more, I don't know if intuitive is the correct word, but they can change on a dime, whereas the bigger companies, you have to go through middle management and boards of directors in order to get things changed and approved. The small business owner is in this country tends to be very resilient and very opportunistic and very innovative as well, and coming up with different ways to do things, different ways to automate things, or different ways to get product out. Reshape, remold, redo their products, and the good ones end up being more successful that way then.
And how should a business prepare for what they don't know what's coming? How do they prepare for this?
Well, and it's kind of a business 101. You always want to have a little bit of nest egg cash flow wise, have a good line of credit available and a good relationship with your bank in case you do need to invest in some other technology or in some other machinery or whatever it might be, or invest in people. Because if you need to staff up in order to get something done, you've got a good way to do something, a good new way. Go ahead and invest in that, but you need to have that capital behind you in order to make that happen. So that's the first thing that comes to mind from that standpoint.
So as you look at the next year or so with your clients, there's a lot of things we can't predict, but do they seem pretty confident for the future?
I would say some are, and some are almost in a panic mode. And I say that because it really depends on your side of the political spectrum. And without getting too far into things, I mean, I've had clients who want to see some of these changes come through and are excited about it and and are looking at opportunities. I've had other clients who quite honestly think Elon Musk is going to steal their tax refund. So, I mean, it's both sides of the spectrum.
Okay. We're at the place where we're going to take our final break. You're listening to Biz Talk with Score and WHBY, and we'll be right back after these messages.
Welcome back to Biz Talk with Score on WHBY. I'm Rick Sense along with Terry Pinch this morning, and our guest is Kurt Heling from Heling and Associates, longtime sponsor and friend of the program. But before we go back to our conversation with Kurt, I'd like to just take a moment to thank of the sponsors and donors who bring Biz Talk with Score to you each weekend. We couldn't present Biz Talk without their generous support. Thank you to Kurt and Heling and Associates. Heling and Associates helps small businesses and individuals not just prepare tax returns, but plan ahead, helping you minimize taxes for this year and beyond. Heling and Associates, personal connection, positive results. Thank you to Johnson Financial Group. Wherever you are in your life or the life of your business, Johnson Financial Group works with you to understand your goals, matching the right banking and wealth services to help you complete your mission. Thanks to the Business News for promoting our program in the biweekly business newspaper serving Northeast Wisconsin. The paper is delivered biweekly and contains relevant and useful information about the business community in Northeast Wisconsin. We would also like to recognize the David L. and Rita E. Nelson Fund within the Community Foundation for the Fox Valley region for their generous donation in support of Biz Talk and Score Northeast Wisconsin. So, Kurt, if people want to get in touch with you or learn more, where can we direct them?
They can give us a call, 920-886-2241. They can also look us up at healingandassociates.com. We've got some interactive tools on our website they can use as well, so they can feel free to give us a call or set up something via email or website.
All right. Just curious, we've talked about it briefly in previous shows and over the years. How is the business portion of what you do, your actual business, working right now and going for you?
So we've had a number of new people coming in over the last couple of years via replacement and new positions opening up. So we've got multiple CPAs here right now. We've got a certified QuickBooks advisors. So we talked about that earlier in the show. So we've got people that are specialized in training on that, payroll specialists, as well as people that can help on the accounting and tax side of things. So we've got 11 full-timers right now, including myself, plus seasonal people. So from that standpoint, I mean, we've been going gangbusters, to the point where, I mean, kind of busting out at the seams in certain ways. So, it's one of those things, we run through the same things as some of your other business owners do, managing growth, managing people, managing our office space and our office technology and everything like that. So that's one of the things, as we deal with business owners, I like to say that when you're dealing with somebody here, you're dealing with somebody who's actually been in business, who understands and has been in the situation of, okay, what checks came in today or what payments came in today, so I know what checks I can send out at some point, how to manage receivables, how to manage some of those sorts of things that a lot of times accountants that are working with some of the bigger firms that have never dealt with that in the real world don't have that real world experience that we can help people with.
So are you having fun?
Oh yeah, it's still fun.
Yeah. And what do you, when you get up in the morning, what thing do you look forward to the most yet about what you do?
Honestly, it depends on the day, and that's part of the fun part about it is every day is a little bit different. I might be talking with people related to their business startup. Last year we had a number of businesses where the owners sold, so we're dealing with things like that. Number of different things. So we might, it really depends on the day, and that's part of what keeps it fun.
All right. Well, I appreciate the fact that you're able to still have fun even when you're dealing with things like taxes. So that's great. Kurt, just as always, it's great having you on the program. And truly, we appreciate your support of the program over the years. It's just a wonderful thing that you and your teammates are doing there at Heling and Associates. So thank you for that. And listeners, I just want to give you the opportunity again to share that we do a podcast, and it's being hosted by Buzzsprout and available on all your podcatchers out there. And would love for you to share the fact with friends, neighbors that we are doing that as a podcast as well. So if you want to catch this program again, wait for it till next Wednesday. It'll be made available on those services then. So once again, you're listening to Biz Talk with Score on WHBY. Thank you so much for listening, and have a great week, everyone.